Breaking news, 'tis the season for IPOs. We've seen Snapchat go public. Blue Apron could pick up an IPO by the end of the year, but will the ongoing market correction lead to legal battles for some of these companies? Charlie Gasparino with the exclusive detail.
We should point out that right now Goldman Sachs, if you go to its website, is promoting 2017 as the year of the tech IPOs. They've been talking about as many as 7 big tech IPOs coming. We already have Snap. Other names, you hear Uber, Lyft.
This year?
This year. Airbnb.
I don't know.
Blue Apron, which I kind of don't get, but...
I've done that. They send you the fresh food, but then you still have to make it.
Still have to make it.
And again,
and the value,
I can't cook.
Okay, the valuations are pretty unbelievable. Uber, $62.5 billion valued right now. It's a private company. This is what its financing is valued at. Spotify, $8.5 billion, another one that's coming.
That I would see.
Airbnb, $30 billion. You really think that's a $30 billion IPO? Blue Apron, $3 billion. Here's the thing. We should point out Goldman Sachs, other big Wall Street firms are pumping these stocks up. But look at the recent performance of Snap. Came public at 27, trading at 23. It could trade. It was trading at 9.
22.
22. It could go down. It was down as low as 19.
22.35 right now. By the way, we have a lot of people listening on XM 113.
Yes. Okay.
Always have to just sort of say it because
right,
I know you guys are out there driving on the I-5 or the 405 or.
Well, yeah, and you know what?
70
yeah,
in Cleveland.
And here's what I would tell them.
17.
Watch out for these valuations of these stocks. The bankers themselves, I've been talking to them lately, say they're way overvalued, that these things are going to come public because of the dearth of IPOs at such a enormous valuation, more than what they're worth. And two things that investment bankers, these are the guys working on the deals, are telling me. Well, 3 things. Number 1, they think they're in a lousy business, but they have to pay the bills, so that's why they sell these things. Number 2, they're way overvalued. They're going to sell at a high price, and they're going to come down in value after the open. And number 3, they believe that Wall Street, the big firms that are doing these deals, Goldman Sachs, J.P. Morgan, Morgan Stanley, they're setting themselves up. Citigroup, I should point out, which was, I think it was Goldman Sachs and Citigroup who did Snap. We should point out that they are setting themselves up. The bankers are saying this for massive investor lawsuits if and when this thing corrects.
Because the IPOs will be sparkly and then they'll lose their luster?
Yes. And look at it this way, Liz. We don't have a lot of IPOs. There is a need. I mean, investors want to invest in IPOs. They are playing off that dearth of IPO right now. That's why a Snap can come public at 26 without making any money. That's why Twitter came public at whatever it was and is well below that, we should point out. I believe they came public at, what, 20? I can't remember. What was Twitter's what did they come public at?
Not sure, but
look where they're trading now. It's
yeah,
well below that.
They just got another downgrade.
Okay, so I'm just saying that what the bankers are saying for every Facebook out there that has made it, what they're saying is that there are many more Twitters and Snaps, and because of the lack of supply of IPOs, people plow into these things. They bid up the price. And guess what? They get held with the bag. The second part of the equation is, will the banks pay in terms of lawsuits in the future, investor lawsuits? Now, bankers are saying, based on where these things are coming, they are likely to pay because the Wall Street firms are squeezing these companies for higher valuations that they're just not worth.
Of all those names you mentioned that Goldman says are going to come public, Bill Gates, when I asked him in Davos a year ago, which sort of unicorn thrills you the most? Without even guessing, he just immediately said Airbnb.
Interesting. Why?
He thinks it's a brilliant business model, and he said it just works, and it created a need for something that was really there.
Not Uber.
He didn't mention Uber. He mentioned Airbnb.
That's interesting. Listen, they all could be great. They all could be great businesses. The question is, are they worth what they're going to, what Wall Street is selling them at? The bankers are telling me they're not. And that's a problem for the investor and maybe for the banks if they get sued later on.
Charlie, thank you very much. Charlie Gasparino.